can do live on Instagram? What's that?
Airing live weekly for an hour from Galata Suites, downtown Dearborn. It includes various segments and competitions in addition to daily and social topics and numerous guests.
Good evening, everyone. My name is Hassan Ahmad, and I have the pleasure of being your host this evening. Welcome to the Dearborn Show. We bring you a weekly dose of engaging conversation and insightful discussion. Join us every week as we host a diverse range of guests exploring social and lifestyle topics that matter most to our community. Today's topic is special. It's navigating property assessment notice, where we go in depth in explaining and understanding the assessment notice. To do so, we are lucky to have a special guest with us this evening. She is a dedicated certified Michigan Advanced Assessing Officer, a former president and current member of Wayne County Association of Assessing Officers. She serves as the assessor for both cities of Dearborn Heights and Rockwood, where she oversees the valuation of thousands of residential, commercial, and industrial properties. Mrs. Kimberly Comer, we are delighted to have you and welcome to the Dearborn Show. Can you tell us more about yourself?
Sure, thank you for having me. My name is Kimberly Comer. I grew up in Dearborn, so I'm from the area. I have been doing property assessment for 20 years now. I started as a teenager. It runs in the family. That was my first summer job, was working in assessing departments. And my very first job in assessing was managing March Board of Review and helping residents get prepared for that. So this is the season that we are now back in it. I worked in multiple counties. I worked in a variety of offices, and I've had the pleasure of meeting a variety of residents and business owners, and it's been a pleasure serving them.
Well, thank you so much for being with us this evening. So let's get into it. So the assessment notice, I know most cities have mailed their assessment notice for the properties in their cities. Can we go in depth in comparison between what's called assessed value versus taxable value? A lot of people, they receive those assessment notice and they have no clue what's the assessed value versus the taxable value. Like just today, I got at least 10 people that texted me a picture of their assessment, asking to explain to them exactly what's going on.
Yeah.
So can you please go ahead and go in depth in explaining the difference between assessed value and taxable value?
Absolutely. These are two separate values that will change every year. So first is your assessed value. That is what the assessor has deemed that the half of the value of the property is in the market. So every December 31st, that is tax day. That is the day we look at all buildings and see what state that they are in, to the best of our knowledge, and we put a value on there. And that value should be approximately 50% of what the property is worth in the market. So hypothetically, if you have an assessed value that is $100,000, we are saying that the property is worth approximately $200,000 sellable on the market. We do that by looking at a 2-year sales study when the market is increasing and a 1-year sales study when the market is decreasing. And so that is the information we use to calculate what the assessed value is. And that takes into account most construction and things of that sort.
Excellent.
And then the taxable value, that is the number that is very important that everyone needs to understand. So your first full year of ownership, if you bought in 24, your first full year of ownership will be 25. Your assessed and your taxable will be the same number for that first year. From that point forward, your taxable value is the rate as the current year. So if you bought in, you bought in 24, your assessed and your tax will be the same in 25. In 26, your 26 taxable is the 25th taxable, minus anything you've removed from the property, times the rate of inflation, and then additionally anything newly constructed on the property. And so that equation is what is used by every single property in the state of Michigan, unless it has sold the previous year and it uncaps.
Okay.
And so for homeowners that have owned their properties for many years, you will see that your assessed value is much higher than your taxable value. However, if you sold that property the following year, they would become the same number.
Yeah, probably that's something we're going to get. That's something we're going to get to in a few. But since we're at assessing right now, can you? I know I've been to your office and it's a whole, assembly line. But the thing is, can you go briefly in the process of how you assess those homes? I know there's a computer system, but I bet there's so many different things that go in assessing homes. Can you go briefly in it, please?
Sure. The assessment starts with the manuals that the state puts out. They are cost manuals that they pay to have calculated, and so that kind of gives a rough determination of a starting point for construction values for homes. Mm-hmm. And then from that point forward, there is county adjustments put on there for how much construction is in your county. So say this square foot of this material is 100 in the manual. Well, in Wayne County, it might be more expensive to construct than out in Kent County. Well, maybe not Kent County, but in a county where the construction rates are cheaper. So first there's the county, and then there is the local economic condition factor, and that's when those sales studies go into effect. So what we're looking at is what is physically present on the property, and then from that point forward, we start doing our sales study, which happens at the county and at the city level.
So many people always ask me if they add a pool, if now they add a patio outside, if they add a shed, does this affect their assessment?
Yes, items such as those do affect the assessment and the taxable. Mm-hmm. So if you construct a new in-ground pool, that will affect your taxes. So just know that any kind of additions put on will change things. However, there are items you can update that don't affect your taxes if you are a residential property. If you're a residential property and you update your roof, your windows, things that are just replacements and standard repair, you are not taxed additionally on those items. They might affect your assessment, but they would never affect your taxable value. Those taxes would be applied when the property sells.
Thank you, Kim. One of the titles on the assessment notice always says, and people ask me about it, the rate of inflation multiplier. Can we go in depth in explaining what is the rate of inflation multiplier and how does it affect the assessment?
Sure. Absolutely. The rate of inflation multiplier is something that is given out by the state at the end of the year, every year. And so that inflation rate is applied across the board to every city in Michigan, every township. So local units don't really have a say in the increase. We go by whatever is directed by the state. And that number doesn't affect your assessed, it affects your taxable. So that number is part of that calculation I mentioned earlier. If we go back, it is last year's taxable minus anything you've demoed from the property times this rate of inflation. Mm-hmm. So for this upcoming year, the rate of inflation is going to be 3.1%.
Okay.
And so everyone can take their last year's taxable minus anything they've demoed times that 3.1%, and then they add on any brand new construction. If there is nothing, you add 0, and that'll get you close to where your new that'll get you your new taxable value.
So that rate is not fixed every year. It changes every year with the inflation of the economy, correct?
Correct.
That's how it works. So you said it was 3.1% this year. What was it the past couple of years?
The past couple of years, we were actually at a capped rate. So the state has a law that if the rate of inflation is higher than 5%, your taxes cannot increase past that 5%. For the past 2 years, it has been higher than 5%, so we've been capped at that 5%. So this year, rate of inflation has come down a little bit, which is good news for people paying taxes.
So at least we have some good news today that the inflation rate went from 5% to 3.1%, which is good. As a real estate agent, I know everybody when they sign at the closing table, there's something that the buyers have to file with the city assessor, which is two documents. One is called the transfer affidavit, and the other one's called homestead exemption. I make sure as a real estate agent myself to go and file them for my client because especially the first-time home buyers, they're so excited. You tell them you make sure you have to file them within 45 days, and most of them don't. So I make sure I file it myself, but can we go ahead and explain exactly what is the transfer affidavit and what is the homestead exemption?
Absolutely. So that first form is called a property transfer affidavit. Most of the time, your closing agent will give one to you. However, if you're not going through a closing agent or a title company, you're doing things on your own, creating your own deeds, quitclaim deeds, things like that, it's still your responsibility to make sure you get what's called a property transfer affidavit off to your local community. So your city assessor or your township assessor. You want to make sure that you get that form to them within 45 days. What's on there is the information about your sale. So it's going to be who is the sellers, who are the buyers, what is your phone number, where do you live, so we can send you the mail. It's basically the information we need to process and update our records. And on there's a whole section for exemptions. And what those exemptions are exemptions to uncapping, which we talked about earlier. Mm-hmm. And so I think something that people in the community should be super aware of is when you're adding people, moving property around, transferring it into LLCs, adding on your sister, your mother, your cousin, your neighbor, you just should definitely reference the property transfer guidelines that are given by the state, because some transfers are exempt from uncapping, which increases your taxes, and some transfers are not. Such as if I own a property and I get married and I add my husband onto my property, my taxes don't go up. That is considered an exempt transfer. I would file my property transfer affidavit with the city. I'd mark exemption, and then I'm all set. However, if I transferred a property to you, it would uncap. And if you didn't file that PTA within 45 days, there are consequences of not filing in most cities. Most cities have what's called PTA penalties. And so if you have a residential property that is your primary residence and you fail to file, it passed the 45 days, it's $5 a day up to $200. If you have a residential property that is not a primary residence and is being used for commercial purposes such as the rental, they just updated that law, and that fine can go up to, I believe the new number is $4,000. So it is imperative to talk to your assessor and get those forms in as soon as possible. The second form is called a principal residence exemption, and that is only necessary when you are going to occupy that property that you just purchased as your primary residence. That is stating to the city and to the state that you are going to live there, vote there, your registration, all of your information is going to be through that property as your primary residence. And what that does is it gives you an exemption from a portion of taxes. So if you are occupying a property, you want to make sure when you look at your assessment notice that it says PRE or principal residence exemption 100%, or if you're renting a portion, it could be a lower percentage. But you always want to make sure it has something other than zero if that property is your primary residence.
Thank you, Kim. I know you mentioned about the homestead exemption, but a lot of people, they ask me, sometimes they live over here and they have another house up north. Are they allowed to have more than one homestead exemption?
In the state of Michigan, you are only allowed to claim a homestead on one property. So it is very common to have people who have multiple properties in different states or up north and things along those lines. However, you are only entitled to one principal residence exemption. So if for any reason you file two, the state will go ahead and deny and charge you back taxes. So you want to make sure that you are claiming the primary residence where you want to be voting out of, where you want your driver's license out of. So if your cabin up north is where you want to vote at, that's where your primary residence should be. If you live down, say you're in Dearborn and you want to vote in Dearborn and your driver's license is out of Dearborn, then your principal residence should also be in Dearborn.
I know you were talking about the uncapping earlier, and you were saying that if somebody buys a property in 2024, so he's going to be uncapped in 2025. And I know uncapping has to do with something called Proposal A from the state. Can we explain more about Proposal A and the uncapping?
Sure. Prior to 1994, you only had one value to work off of, and that's what you were taxed based off of, which was your assessed value. I wasn't an assessor at the time, but at that point, you only had to worry about one value. Now that there are the two, you have to manage that taxable value, which is that's what causes that uncapping. So Proposal A just ensured that people had protections to stay in their property over time. That's the intention. Mm-hmm. So if Dearborn becomes Silicon Valley 2.0 and everyone's $200,000 house is a $1.2 million house, you're still only going to be taxed on the market plus the rate of inflation from when you purchased. So it protects you over time from an increase in the market and growth.
Excellent. So now let's go in depth. I know a lot of people probably, especially I know the real estate value has been going up the last couple of years, and now everybody's getting their assessment, and a lot of people they're not gonna be happy with their assessment, and it's not your fault. But can we go in depth about the process of appealing the taxes or the assessment in case there's anything they think it's wrong or the assessment came out wrong?
Absolutely. So assessors are doing mass appraisal, so everyone should keep in mind we might not have individually looked at your parcel necessarily that year, just because some assessors are dealing with tens of thousands of parcels. So it's very important that you review the notice that just went out to you. On that notice at the bottom, it has all the information that you will need to appeal in your city or in the city the property you own is located. So you'll want to look at the bottom and it'll have the dates and times for the March Board of Review. Every city has their own rules for when that is that are within the state guidelines. So the hours and the exact days change from city to city. So you need to make sure you read your assessment. If you have not received your assessment, I would say by the end of next week, then I would call your assessor and your local office and just see where it's at, or if you can get a copy of it if it hasn't come yet. Because the Board of Review only meets one time to review valuation in the year.
Since you mentioned the Board of Review, a lot of people, they hear the word Board of Review, but what exactly the Board of Review?
Sure. The Board of Review consists of typically a body of voters from your community that have been appointed by however your charter says. In certain cities, it's the mayor that appoints them or the city council. And so it is a panel of fellow voters who will assist you in reviewing your property. And so what that means is if you believe, hypothetically, you bought a house for $200,000, but your assessed value is $150,000. So that the assessor's saying your house is worth $300,000. So what you would do is you would file a petition for the March Board of Review and make an appointment. So you call your local assessor's office and say, I want to make an appointment, or you can do a write-in appointment in most communities. So you want to make sure you read the bottom of your notice so you know what the rules specific to your community is. And so you go before this panel. It's a relaxed environment. It is, you usually have anywhere from 5 to 15 minutes to speak, depending on what the rules are, and you basically present the information. Your petition will say where your property is, what the values are, and you need to put down what you believe the value should be. And so you would write down, in our case, the $100,000 instead of the $150,000. And then there'll be notes and comments at the bottom you can include, and you can include any kind of backup information that you have. And a good thing would be looking at other sales in your area, or if you recently sold, you could bring that information in. And so what the board does is they review your information and then they make a decision, and you get a letter in the mail about that decision. So you will present your appeal, state your case, or write your letter. They will review it, and they will look at your evidence. They will look at other information that they have about the city, whether it's their own sales.
So what kind of evidence they should bring with them?
A lot of times people will bring comparable sales. Like, oh, my neighbor has a similar house, his just sold for X, or I have this appraisal I had done, or I called my realtor friend and he ran me some comps. And so, you know, if you have a realtor you've worked with recently, they might be able to pull some information for you. And there are also different companies and things like that you can reach out to that handle appeals.
Okay. So that appeal process, is it the same process for residential and commercial properties?
It is not. So residential properties are required to go to the March Board of Review. Commercial properties are not. Commercial properties can go straight to the Michigan Tax Tribunal to appeal. However, Tax Tribunal has filing fees. So I always recommend, if you feel comfortable as a business owner or as a property owner, you can always take your appeal to the March Board of Review for free first before you step to the tribunal. However, you are able to go right to the tribunal as a commercial property. The State Tax Commission, or actually the Michigan Tax Tribunal website, has all of the rules and information on there about appealing to the tribunal. And the Michigan State Tax Commission has a bunch of information on their website about assessing and all the stuff we're basically chatting about today.
Thank you, Kim, very much. And I know sometimes every year there would be some changes in the assessment notice. Is there any changes for 2025 from the state?
There aren't any big changes on the notice this year. The big thing to look for is all the same. The most important information has stayed all of the same. It's going to have your last year's values for taxable and assessed, this year's values for taxable and assessed. It's going to have whether you're claiming a primary residence. It is going to have whether it was uncapped or not. There'll be a line at the bottom that says, was this transferred? And it'll either say was or was not. And then it'll have the rate of inflation on there, and it'll also have the reason for change. Most times the reason your value changed is because of the market. Your value, we put the new sales study in, and that raised or lowered the values. And so most people will see market adjustment listed on their notice. And other things you'll see, if you have new construction, that might be listed on your notice. There was a more recent requirement where assessors start putting into the reasons why your value changed, but most values change due to the market.
So going back to the taxable value, so the taxable value basically it's 50% of the true cash value of the property. But in order to calculate property taxes, there's something I guess called millage that is used in every city. How is that millage determined, and what goes in that millage? Because I know every city has different millage.
Yeah. So the taxable value is multiplied by your local millage rate to get how much you actually pay in tax, excusing special assessments, which we could talk about later. But the millage rate is what people have voted on. So anytime something comes up for vote, say your library or police and fire, anything that is new being brought to the board to be voted on, in that vote, if they're asking for money for it on the taxes, it'll say for how many mills. And a mill is every dollar per $1,000 of value. So for every $1,000 of taxable value, and if the millage rate is 1, you pay $1. So if your millage rate in your city is $50 and your taxable is 1,000, or if your millage rate is 50 and your taxable is 1,000, like say you own a little outlot, then it's $50 for taxes. So it's per 1,000. So the calculation will always be your taxable value times the millage rate divided by 1,000.
Excellent. Kim, since you just mentioned special assessment, can you explain what is the special assessment?
Special assessments are values. They're basically put on your tax bill, but they're not millages. So say your community or your area has gotten together and there's a major repair. Say you're all around a pond and the pond needs something to happen. You can create a special assessment where it collects money for just the people around that pond, and that fund will go right into the item that you're creating. That's one type of special assessment. Another type of special assessment could be a special drain fee from the county that could be put on. Or in another community I've worked in, another was a fee for garbage pickup. So special assessments are just fees put on the tax that are not millage rates.
We can move on to the business personal property tax. Kim, any changes in the business personal property tax in 2025?
There isn't too many big changes that people need to know about. At this time, we are now past the deadline for filing your property tax statement and your small business tax exemption. Those are forms that are required to be filed by all businesses, and they go out on January 10th, and they're fileable through February 20th. However, if you're past the deadline to file, at this point you can bring them, but you can also file with it a March Board of Review petition, because the March Board would be the people who update that information. And so if you are a small business, especially if you're a new owner and you haven't gotten a notice or you didn't file anything, I would definitely make sure you contact your assessor's office. Most small businesses are exempt from personal property. However, if they don't file for the exemption, we assessors are required to put an estimate on. So any business that has under $80,000 worth of personal property, so that's the equipment and items within your business, they would be exempt, and they just have to file one time the small business tax exemption. If you have between 80 and 180 in equipment or items in your building that are considered personal property, you file the small business tax exemption and the statement, and you're still exempt. So all the way up to $180,000 of value, you can be exempt in taxation for. So you want to make sure you get the proper forms in so you don't have to pay taxes that you're not required to.
Thank you, Kim, for all this information and knowledge. I know we're going through the assessment notice today, but a lot of people, they ask me, how come there's two taxes a year? One, they call it the winter taxes, and one is the summer taxes. So what's the reason behind it, and where do they go?
So the summer and winter, depending on which community you're in, they account for different items. So in one of my communities, the county collects taxes for most of their items in the winter. So those are all on the tax bill in the winter. And then in the summer, they're collecting for different items. So on your tax bill, it'll say line by line what each millage is for. And if you have questions, your local treasurer's office would be able to answer those for exactly what those millages are for. And so it's just broken out. So like in Dearborn Heights, the summer is a higher tax than the winter. That is just because there's different millages applied in the summer as opposed to the winter. So in one bill you'll collect for the zoo, another bill you'll collect for a community college. It wouldn't always necessarily be the same. So across Michigan, it's going to be different for every single community and every single school district. So you want to make sure you look at your tax bill and you'll be able to see line item by line item what each item is going towards for that time frame.
Thank you so much, Kim. I think now we get to the question and answer segment. If anybody has any questions. They're going to give you the mic. In the back, sorry.
Thank you, Councilman. This question is directed toward the assessor. I'm potentially a home buyer, a new home buyer. And as a new home buyer, I'm assuming that my taxes are the same taxes that the current owner is paying. Is that true? Will that apply to me?
That would not be true. So we're going to circle back to what I mentioned before with that uncapping. So when you go to buy a house, you're going to be like, okay, I'm going to buy 123 Main Street. You go to the city website and you look at what taxes 123 Main Street is paying. Those will not be the taxes that you are paying most of the time in our current market, especially if somebody's owned the property for a long time. You can always check what the assessed and taxable are currently. If there is a large spread between the assessed and taxable, you can assume there will be a large difference in the taxation for when you become the owner. So the state of Michigan actually has a tax calculator online. If you go to michigan.gov or you just Google property tax estimate state of Michigan, they have a very handy calculator that you can put in your assumed assessment. So say you bought a house for $400,000. You could just guess that my assessment be about $200,000. You can put that in, you can put in the school district that you'll be living in, and it will give you an estimate about how much your taxes will be in the future.
What if I don't have the resources to do that? Can I call you?
You can always call your tax assessor. If you found the house of your dreams and you're not sure if you can afford the taxes, call the assessor. That would be the first place I would go if you are unable, especially if you can't access a computer or you don't feel comfortable looking it up yourself. You can always call us, we can take a peek at it, and we can let you know if there will be an increase or if a large uncapping will take place. We're more than happy to answer that question before you make the decision to buy. That way you can make a very informed decision about what you can afford when you're purchasing a property.
Any more questions? I think we have another question here.
Yeah, in the event, let's say you were capped, you've been a resident for the allotted time, and you went ahead and you did some improvements to the home, and you maintained, possibly upgraded some parts of the home. Will that be reopened for an assessment and evaluation and increase of taxes? Could you please elaborate in details what's taxable and what's not?
So there are going to be lists of things. It would take me a minute to list everything out that is and is not taxable. There's a law, like I mentioned earlier, called Matthew Gast that kind of covers standard repairs. So most of the time when you're in a residential property, what I'm talking about right now is residential, commercial's different. If you're updating things like a new roof, and it's a similar kind of roof, you're not going from like asphalt to like copper, but even then there's things that are protected and things that aren't. Anything like an addition, new porches, new patios, new in-ground pools, just giant slabs of concrete, a basketball court, a tennis court, a pool house, new bathrooms, things of those sort, that will increase your assessment. If you're thinking of doing a project, you can always call your assessor's office and ask, hey, these are the improvements I'm thinking of doing to my property. Will that affect my tax rate? And they will have a detailed list. So they can actually talk to you about your specific project so you can know what would affect your taxation and what would not.
Thank you very much, Kim. Any more questions? Do we see any more hands? One more question.
Just one more, yes. Hi. Okay, so if someone purchases a property, a home, and it becomes uncapped, I'm not sure if you guys covered this question already or not, but it becomes uncapped, and then a few years later, does the tax amount increase, and how does it increase? Like, does it depend on the millage rate, or what does it depend on?
So if you've owned your home for a few years, as long as we're in an increasing market like we have been, the taxes will continue to increase with that rate of inflation that we talked about earlier that the state gives us. The state dictates what that amount is. And then the other thing that can increase everything is what you vote on. So if you vote for a new millage or a new bond or things like that, that will affect what your taxes are. So that's always really good to keep in mind what you're voting for, if it's worth it for your property, because somebody who is in a house that's worth $100,000 might be like, yeah, that's worth my money, and somebody who's in a house that's worth $4 million might be like, that's a lot of money, I don't know if I'm interested. So it kind of just varies based on what your budget is what you should be thinking about when you're voting, and if what the cost is worth it to you. You're like, hey, $70 extra a year, worth it to me. I think this is a project I endorse. So that is something to really think about when you're voting in your communities, so that way you know how that will affect you personally from year to year. Me, I always say yes to every library millage that comes up because I love libraries. But, you know, so it's always good to look at that information. And if you have questions, a lot of times whoever put the proposal out will have answers. So if it is a school or a city, you can call those entities and they'll be able to kind of explain how it would affect your taxes too if you have questions.
Thank you very much, Kim. I do have a question from online, since we're going live. It says here, if I cannot make my house payment and my brother will take over the house and payment, and a trust to be made in his name, will the taxes go up?
So, typically, I'm trying to real blanket here because it can get a little bit in the
I think
weeds.
you're talking about it's first blood.
So there is an exemption where if you transfer a property that is a primary residence, not something that is used for commercial, so it's your house, to a family member, it might not uncap. And I say that might because that guidelines is extensive. So putting things into trusts can be exempt. Sometimes taking things out of trusts are not exempt. It's really varied depending on how you have things structured. And I know that's not a great answer, but the law is so detailed about how many different exemptions there are and what does and does not qualify. It's really hard to work on hypotheticals, but there are exemptions for transferring within blood of first degree. So your mother, your father, your adopted child, your grandparents, your brothers and sisters. Now, that does not apply if it's a commercial property. So blood of first degree is just for primary residences. So you got to keep that in mind. If you have a rental property and you give it to your sister and it's her rental property now, it's going to uncap. And that will change the taxes. So you have to keep that in mind when you're doing these kinds of transfers. There might be a way to structure your information where it doesn't uncap. That's why I definitely recommend looking at the property transfer guidelines that the state has or asking your local assessor.
Thank you, Kim. Since you were mentioning exemption, can you list briefly, if you recall all these exemptions, maybe a few of them, if you can, if you don't mind.
Oh, no. So there's exemptions for life estates, there's exemptions for trust, there's exemptions for affiliated entities, there are exemptions for family, there's exemptions for spouses. There's like so many listed on that form.
Where can they find those?
That is all listed on the property transfer affidavit that we spoke about earlier. It has a breakdown of all those exemptions and what they are on there. However, that exemption guidelines that I mentioned, that has a more in-depth understanding of each of those exemptions and what specifically qualifies for them. It has a lot of great examples on there.
Thanks again, Kim. I have another question from online here. Basically saying if I own a property in Michigan and I have homestead on it, can I buy another, for example, in Florida? Can I have the home exemption filed on that property?
You cannot. Especially Florida. Florida are really big sticklers about their primary exemption. I think I get more calls about Florida than I do any other state because you cannot claim two primary residences. Even in Michigan, there's actually a special penalty if you claim one in Michigan and one outside of Michigan at the same time. So you want to make sure that you are only claiming one property as your primary exemption. Back to where I said, where is your license? Where are you voting? Where do you stay, basically? That is where you should be having your primary residence.
Thank you, Kim. I have another question here. It says they went through the board of review before and they were rejected. What's the next step?
So after that, your next step is the Michigan Tax Tribunal. So if you disagree with what so what's going to happen in March is you're going to go to the board of review. They're going to send you a letter once they make their decision. That letter will have whether they kept the values the same or if they changed those values. And then at the bottom, it'll have all the contact information for the Michigan Tax Tribunal. If you want to contact the tax tribunal and get things filed as soon as possible. So they have a website that you'll do all the filing through. If you cannot use that website or you have in-depth questions, you can call your assessor's office and say, I'm trying to do this appeal. Do you have any recommendations? They can usually point you in a good direction. Or you can just, the Michigan Tax Tribunal has a pretty good website where they explain how to go through their process. You can actually, if you're a computer savvy person, you can do it all online, and it's pretty easy.
This question is about commercial property. He said that he did go through the board of review. He was rejected on the board of review. Is it the same process as residential, or he can go to the tax tribunal, or it stops right there?
So anyone can go to the tax tribunal after the March Board of Review. So commercial properties actually don't even have to go to the March Board of Review. Like I mentioned earlier, they are able to file directly with the tax tribunal to do appeals. But you know, that's always going to be an option, is if you disagree with the board, the tribunal is your next step, and your time frame for when to appeal will be listed on the bottom of your notice. So another big thing is the principal residence exemption. That is something that goes to the March, July, and December boards. If you get a decision you don't agree with on July and December, you only have 35 days to appeal. So always make sure you look at the notice that they send you for your deadlines and your dates and times, because if you file past that timeline, they will just reject your appeal at the state level.
I have a funny question here online too. It says, if I file homestead on 2 properties, what's the penalty?
So the penalty will be the past years, the county will send you a bill for the difference between the assessed and the taxable for what you should have been paying to what you did pay. And then they have their own set of penalties and interests and all those other things. I don't have the exact numbers because that all comes from the county, but there is additional problems that come up. So please don't file 2 homesteads, because it just ends up being more work for everybody, and then you have to pay more money in the long run. So, because the state's the one who monitors that. The state has an entire unit that will compare tax filings to our databases. And so they confirm where are you filing taxes based on where you're claiming your primary residence. And the state has the power to go back and deny like the current and 3 years prior.
Thank you, Kim. Before we conclude our segment, any final remarks you can tell the residents?
If you have questions, call your assessor. We're not scary. We just want you to know stuff. So if you have any questions, just let us know. A lot of times our websites have a ton of good information. They'll have how to appeal. They'll have our deadlines. They'll have our forms. They'll have our contact info. They'll probably have more information than you'll ever want to know about assessing on there. Typically, we try to give as much information away as anyone will take.
Thank you so much, Kim, for being with us today and sharing your knowledge. I'd like to thank everybody for watching us, and I would like to wish everybody observing Ramadan Kareem and blessed land. And make sure you tune to watch us next Wednesday. Stay classy, everyone. Have a nice evening. Thank you.
Oh no. That went okay, I think. Thank you. Thank you.
Good job, guys. You both sounded like you knew what you were doing.
Thank God.